Hello, Tiernorts, and welcome to this daily market commentary for Monday, the 1st of July, 2019. Welcome to a new month, welcome to a new quarter, and obviously the second half of the calendar year. I hope the first half was kind to you, and let's hope the second half is even better. So how will we start off? Well, after a mixed weekend for crypto and an agreement at the G20 meeting between China and the US that they would resume trade talks and, at least for now, put a hiatus on putting any more tariffs on each other. It was always going to be an interesting start to the week. Throw in President Trump's brief expedition into North Korea and confirmation of the continuing bromance between President Trump and President Kim. And you've got plenty to focus on to start the week. First up, crypto. Despite several attempts at the top side over the weekend, crypto spent much of Monday testing the downside, most notably Bitcoin, which very briefly dipped below the all-important technical and psychological level of $10,000. Lowest print I saw was down to around about 9,900. Each dip below 280 was equally short-lived as buyers lurked. And as we have seen on many of the pullbacks we've seen in this long-term rally, and I say long-term rally, I'm going back to, when we broke above 4,200 in BTC, at the beginning of April, I suppose. Buyers have been ready to step in, and it seems today's move so far have kind of proved that to be the case. Not a huge bounce by the end of the day. We've got Bitcoin up to 10,350. We've got Ether back up to just over 285, but there is some resilience being shown there. So it's going to be interesting to see how this battle plays out. Really for Bitcoin, I'd say more than anything else, around the 10,000 level, and the implications obviously for the broader market. So what about FX, equities, gold, etc.? Well, the past few weeks have been dominated really by lower bond yields, a weakening dollar, and gold breaking higher. All the while, US equities pushing higher, pushing to new highs, and global equities for the most part performing reasonably well also. The outcome of this weekend's meeting between President Trump and President Xi was largely viewed as a positive. Dow Jones futures would shoot up about 250 points on the when they opened on Sunday night in the US, and we saw US rates, interest rates would rebound with a 10-year yield up to around 204, and the dollar would rally across the board on the back of weekend events. That saw euro dollar drop from 113.70 down to just below 112.85, and we also saw dollar yen rally from a close around 107.75 on Friday up to a high of 108.53 here in the New York market today. Aussie dollar, which I highlighted in yesterday's technical piece, dropped from 70.20 down to a low today of 69.57. Gold in turn would also break lower, falling back below 1,400 to out of around 1382. I think you could call this reversal Monday. Remember, the Fed were very clear that any potential rate cuts would depend on current economic developments, and if a trade war is to be averted, that should change their view on rates pretty quickly. And I think that's what you've seen today. You've seen the market probably a little concerned that the trade war between China and the US is going to have a positive end, which is a good thing, obviously, for the world economy. But it does mean that some of the moves we've seen over the past couple of weeks in terms of interest rates may have seen their extremes. Maybe US rates are going to start rallying back up again a little bit. That in turn should help the dollar and also hurt gold. And that's really what you've seen today. You've seen a one-day unwinding of those positions. Obviously, that can change based on the next tweet out of the president's mouth. But for today, that's really what we have to work off. As far as equities are concerned, equities, as I said, they opened. Dow Jones was up 250 points at one stage on the futures. During the day, fell back down, almost back to flat on the day at one point, and ended up running to close up 117 points. And the S&P also closed higher on the day to a new record close of 2964.33. So a good start to the second half of the year for equities, with obviously some records being made there. On the technical front, I really just wanted to highlight this chart from yesterday. I do like to try and keep things fairly simple with charts concerned, especially when you have new traders watching and you don't really want to blind them with science and too many lines all over the place. One of the simplest things we can look at as traders is just simple trend lines, and this is the one I highlighted yesterday. This is Aussie trend line off the low in mid-June from 68.32 up to essentially Friday's close. And what we've seen here is a very sharp break below that trend line down towards today's low of 69.56, 57 area. But very clean break. If you'd have sold that break, you would have had some instant gratification. So that's a pretty good idea of what to look for when you're looking at these. You can look at some trend lines. If you're someone like me, I always like trading breaks on trend lines. This one, for example, I'd have sold probably a few points on a break below, and then left a fairly tight stop coming back through the other way to the top side. And on this occasion, obviously, that would have worked quite well. What we do have here, potentially, and it's certainly not something I get too carried away with yet, is you actually have an inverse head and shoulders formation. This would be the first shoulder over here. We then have the rally. Then we have the head. Then we come back over here. We form a neckline around this sort of 70-20 area. If we get a move back down here, back down towards 69 to figure again, that would form the second shoulder. And intuitively, you would expect a rally from there to break back up and back above the 70-20 area and beyond. That would be a very classical inverse head and shoulders formation. Something to keep an eye on. You definitely don't want to preempt anything when it comes to technical analysis of technical formations, but something quite nice in the making there if it comes to fruition. And with that is the end of the commentary for today. It'll be very interesting to see where we start things off tomorrow, whether Bitcoin would have held 10,000 and whether the dollar would have held on to Monday's gains. We wish you all the very best of luck and look forward to talking again tomorrow. Cheers.